Silver relatively outperformed. Explosive gains. Silver moved up roughly 150% year to date and almost touching 80 today, as I just showed you, with a half hour to go to close. Reasons, of course, is the dual nature of silver, both safe haven and industrial demand, and the persistent supply deficits leading to market tightness.
The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
Well, another year goes by. Last week I said I might not be doing a perspective, but I am. I'm home. And I will just start off here on the Kitco website. And I'm sure anyone that follows my channel is well aware of how extraordinarily strong the metals are today. You can see these percentages. And, we're looking at almost 10% up in silver one day, $7. But I'm doing this a half hour before the close, by the way. So almost 10%, almost 9% on platinum, palladium about the same, and gold's only up 1%. So an extraordinary year. This is going to be brief because there is so much information out there now. In fact, almost an overload of information. Just be careful. There are a lot of AIs out there, and a lot of it is propaganda. Great propaganda is 80% truth and 20% distorted misinformation or disinformation, trying to lead you one way or another, selling a product or service, who knows. Regardless, be careful. A lot of members have gotten a hold of me about, these very, very popular AI-generated metals podcast. And again, be careful. They're not all 100%. So moving on, 2025 is going to be brief. What happened? Gold was safe haven dominant this year, 2025. The historic rally, gold surged about 70-75% in 2025. And as I just showed you, hit all-time highs above 4,500. The main drivers, there's several, but expectations of the U.S. rate cuts for 2026 and falling real yields. Secondly, probably most important, geopolitical risk and economic uncertainties, boosting safe haven flows, and that's backed up by central banks continuing to buy heavily in the gold market. So if we summarize the gold market for 2025, very broad brush. Gold had one of its strongest years since 1979, led by macro stress, currency debasement fears, yield dynamics. And of course, the word debasement has become debasement trade. Of course, I've been talking about that for years, but now it's a popular meme. Silver relatively outperformed. Explosive gains. Silver moved up roughly 150% year to date and almost touching 80 today, as I just showed you, with a half hour to go to close. Reasons, of course, is the dual nature of silver, both safe haven and industrial demand, and the persistent supply deficits leading to market tightness, and then a lot of things that are partially verified, some verified fully, and that's what's going on. The Anglo-American Empire between the LBMA and the COMEX, shipping metal back and forth, and of course the Asian markets taking more and more dominance all the time, with a lot of physical metal going through Hong Kong. And of course, China is tightening up their legislation starting January 1st with basically some legal issues around outflows of silver. I'll be writing about that in detail in the next issue of the Morgan Report. Platinum, the quiet giant. I don't want to tap myself on the back too much because I don't want to mislead or misguide anyone, but we did call that almost perfectly, and I just bought it for the reasons it was undervalued. It was like $900,000, knowing that platinum mines in South Africa cost about $1,200 to mine it. So I thought it was the safest on a risk-reward profile, meaning the downside was almost zero, because if you're buying it under the cost of production, you're pretty safe. Anyway, it's had a massive move. It's more than doubled. It's up 2,400 today or thereabouts. And there are reasons for it. There's a structural shift. Tight supply fundamentals are widening. The deficit, renewed industrial interest, and a lot of that has to do with the hydrogen economy and jewelry demand. Actually, in the Asian markets, at least for a while, it got very hot because it was so much cheaper than gold. And of course, platinum for most of the time has been at a premium to gold. And of course, it's at a discount to gold. So often overlooked, platinum exploded higher this year, and the scarcity and renewed industrial and consumer demand is taking it even higher. Palladium, pretty much the same story, although it's more tied directly to automobiles. Platinum serves a little more than that, and a strong rebound. It's a better automotive selector for ICE, and it's spilled over because everything's moving. If you can't get gold or silver, or it's not readily supplied, whatever, all these four metals really do move together as the inflation situation starts to come to an end. So let's talk a little bit about 2026 outlook and what will continue to drive the market. So 2026 outlook for gold, it's very bullish. You have institutional, industrial, some, and retail. Safe haven status, expected rate cuts and lower yields. Deutsche Bank and others see gold trading between the 4,000 and 5,000 range, with upside toward 5,000. That's banks. Potential risk. If economic data stays strong, rate cuts might be delayed. Stronger dollar could surprise policy shifts. We could see some consolidation. Normally, the first quarter of every year is pretty bullish for the metals, especially platinum, palladium, but as a seasonality doesn't mean it takes hold every year. Silver, technical breakout suggests price discovery is taking place well beyond the old ceiling. I said at around 50, we'll see some little back and forth. It'd probably stall out around that area for a while, which it did. It took a couple tries through 50, and now whether or not we ever see below 50 again or not remains to be determined. But now that we're almost at 80, it doesn't seem likely that we'll see down to 50. But silver can move both directions, and we do want to keep that in mind. Risk, of course, of the high volatility in the silver market due to investors' positioning and what takes place in the Asian markets. If the physical demand is met and the market meets equilibrium, we might see something as far as the consolidation is concerned. So my outlook at this point in time, subject to change, is continuing to outperform. And if the industrial use stays strong, $88 targets is well within reach, probably 100 next year. Time will tell. Platinum, supply tightness continues. Risk, some forecasts suggest surplus or balancing supply in 2026. So the outlook is still bullish. In palladium, auto catalyst demand is recovering. Market supply scenario, if electric vehicles accelerate and recycling increases, might not have the demand as bullish as it sounds at this point in time. Key macro factors for 2026, monetary policy, direction of the dollar, geopolitical stress, industrial rotation, and supply fundamentals. Short summary, 2026 remains bullish. Dynamics vary. Gold consolidation with upside potential. Silver strong industrial tailwinds. Price discovery still in motion. Platinum elevated levels with steadily drifting higher. And palladium moderate gains tied to auto demand. I'll leave it at that. Lots of information for you out there on the web. I've got the page here for the premium subscription. You can scroll down, read more about it. It's fairly clear what you get here. There's 3 that you can join: the basic, the premium, and the mastermind. And in the premium or mastermind, I give you a half hour of my time to speak with you about your goals in the Morgan Report, what works best for you, and that will continue. The free 15-minute call is only good for another couple of days, Monday and Tuesday, and I'm going to stop that. It's frankly wearing me out, and a few, not many, but a few are taking kind of advantage of it, which is fine. It happens. So I'm going to leave it there. I'll say Happy New Year to everyone.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today. Download your free report. Get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.